The XVG token by The Verge is exploding. 165% gains in the last week alone. What is causing this rally, and does it make sense to jump on this rally? We are going to talk about all of this in this video. This is Verge. XVG 165% in 7 days. A privacy-focused digital currency that now just got ISO 222 compliance. Now, this is a standard in order to integrate quicker with the traditional financial system. So it's a data messaging standard that allows for moving money directly from the blockchain, in this case, to a bank account. Now, this rally seems a little bit excessive, simply just for getting an ISO certification. So what's really going on? As so many things in crypto right now, it's regulation. Look at this. Binance reverses decision to delist privacy coins in Europe. And so the XVG team tweets the following. We are pleased to inform that XVG will remain unaffected by Binance's trading restrictions on privacy coins in certain EU countries. That tweet was done on June 22nd, so 2 weeks ago, roughly. Now, this is a very massive rally, and it started pretty much since the 22nd of June. So we didn't just have a rally in the last 7 days. This is XVG moving from 0.14 cents to currently 0.8 cents almost. 460% in US dollar gains in just the last few days. So how far could this potentially go? Are we simply just going straight further up from here? I personally have my doubts, and that's because when you zoom out and when you compare this to Bitcoin and Ethereum over the long term, then news-driven rallies like this can be very, very dangerous. There's a lot of attention on XVG right now. Here, this is XVG versus Ethereum in just the very short term, right? On an hourly chart. But let's switch to the daily chart and let's zoom out. Look at this. This is a chart that starts in December of 2017, and relative to Ethereum, Verge dropped by 98.6%. A very constant underperformance, and whenever we saw a rally, we subsequently found a very clear sell-off. Currently, the rally is obviously also very pronounced, even on the long-term chart. But here's something that is noteworthy. Look at the trading volume. How much does this token actually get traded? And look at how this trading volume correlates with the price. So for example, over here, right? Let's zoom in at the very beginning, the day when we had very elevated trading volume, 200 million tokens changing hands. And this was locally a top in the price. A lot of attention creates a lot of demand. Attention dies down, trading volume goes down. The price, at least relative to Ethereum, tends to decline. And so when we zoom into the current situation, again, trading volume is rather elevated. And this is a danger. When you see this relative valuation chart, right? This is versus Ethereum, this is versus Bitcoin. It's not that different. It is a chart that pretty much invites to bet on falling prices, at least in relative terms. It is a chart that a lot of people have probably short sold. Many people borrowed the token in order to then pay back that loan with a lower valuation. So what I think what's actually going on here is forced liquidations. In other words, many people thought that XVG continues to go down. Then some slight positive news come out, and then the upside, the positive momentum that gets generated from those slightly positive news is massive, because just a small tick upwards could be enough to liquidate all those bears. If you short a token, you have to deposit collateral. You've got a certain threshold where if the position goes against you, you have to buy back the token. That's called a short squeeze. That's probably what's going on. The token is mainly traded on Binance. And Binance obviously knows how many of those tokens had been borrowed to bet on falling prices. So there are vested interests in getting those shorts liquidated. Binance makes money when shorts get liquidated. And this is simply a chart that very much invites to bet on falling prices. Very few charts look like this, but what this in turn also means is that if this is a short squeeze, the price will likely normalize again after the liquidations. So short squeezes are temporary in nature. You temporarily elevate the price, let everybody force buy back in for higher prices. Then you sell your token for the higher prices if you were the one that pushed up the price in the first hand. You pocket all the difference. and the price afterwards continues to deflate again. So in my opinion, it's very likely that again, after a while, we see reduced trading volume and again, a price that tends to bleed versus Bitcoin and versus Ethereum. Nobody knows what happens to the US dollar price, right? Of course, when all of crypto goes up, then the XVG price can go up as well. But if you account for that, if you instead look at the price denominated in ETH or denominated in Bitcoin, and the rallies are much more subtle, the volatility is way lower. So I don't dare to make any prediction on where the US dollar price of XVG will go. But I do think if we give this long enough of a time horizon, that it's very likely that this altcoin, as so many others, will continue to underperform. It's a very dangerous game to try to chase the pump. You can very quickly become the exit liquidity of the people that make gains during those pumps. Instead of trying to find the one altcoin that goes up, why not do the opposite? Why not simply bet on falling prices for most of the other altcoins that tend to go down? Now, making money with falling prices is actually easier than making money from rising prices. And that's because of the return distribution in crypto. Very few altcoins outperform Bitcoin and Ethereum. The vast majority has very poor tokenomics. It has expanding token supply. It doesn't have enough people jumping onto the project. It has a lot of potential competition, and that makes most altcoins underperform. So it is easier to bet on falling prices of the poorest altcoins than it is to find the needle in the haystack, to find the one altcoin that might do better than Bitcoin. If you just select a random altcoin out of the top 100, chances are that you're going to do worse than Bitcoin. The chances are probably above 80%. So it's easier to generate alpha on top of just holding Bitcoin by betting on falling prices of poor performers. And the first time where I did this very publicly on the YouTube channel was with the Pancake Swap token. So this is the chart, Cake relative to BNB. It really crashed. And we totally anticipated this crash more than 50% because of the unlock of the staking program of Cake. Now you don't have to trust me, simply just look at the history in premium here with the keyword Cake. We talked about this all the time, starting even from the 3rd of January 2023. So this was over here. And so this is how I handle my videos. I never delete any premium video. I never delete any YouTube video. You can track back what I've said in the past and simply look at how this ages. And I'm for sure not right all the time, but since statistics are in our favor when we bet on falling prices, I am more often right than wrong when it comes to shorting altcoins. Now here's another example. This is Filecoin. This is falling relative to Bitcoin. It's still an open position. Then we've got Optimism. I have talked about this Optimism short already on YouTube, and I still keep that open. I don't think that as to date, which is the 5th of June 2023, that the team and the early backers have already sold. Most of the price depreciation we see so far is probably from short speculative money such as us. There's also other very profit-making positions. This one, for example, I'm not going to disclose this openly now. This is part of premium. Here's another one that we expect to very soon go further down. Again, part of premium. And so that's why the relatively high price of $75 per month is worth it. There is real alpha, real outperformance in the premium membership. If you've got $5,000 that you're willing to dedicate to crypto investments, then I'm very sure that the money that you spend on premium will more than make up for it. The crypto market is simply that inefficient. It's way easier to beat crypto than it is, for example, the stock market, where there's now so many professional investors already in it. But I do understand how spending $75 on a monthly subscription might feel somewhat daunting at the beginning. But I did see how most people simply stay subscribed for the long term because of all of those opportunities. And so here comes the deal. If you are unhappy with the content that comes with premium, if you are dissatisfied, then I will refund you 100% if you message me in the first week. So you sign up, you watch all the videos, you download all the content you want, you check out the Telegram channels, etc. And if after 1 week you don't feel like you get adequate value out of this, then message me in Telegram or email me and you get all your money back. I will simply just refund you within Stripe. I'm that certain that it's really worth it. So there's really no downside for you. There's only upside for trying it out. I really wouldn't know a reason why you wouldn't just give it a shot. So looking forward to see you in Premium. Looking forward to see you in the Premium chats, in the Premium Telegrams. We discuss various opportunities over here. And of course, thanks for watching this video. Bye-bye.